This is Satya Prathyman of Cirrus Research. The latest issue of the briefing is just out. The title, Industrials Broadening and AI Leadership Highlight a Strong First Quarter. Underneath all of this is the idea that the global profit cycle is bottoming and the U.S. economy continues to run strong. This is allowing more of a cyclical bounce among securities. So what we've got now is not just really a demand for AI exposure, but also a more cyclical real economy broadening. Importantly, in the recent months, the market and investors have begun to recognize that we're more likely to see a dovish Fed in the months to come. What this may likely propel is not only is the speculative run likely to continue with the AI trade, but it may also broaden out to also some of the healthcare firms, such as Lilly and Novo, as so-called the Ozempic miracle. So this is something to watch. It's already underway, and it does seem to make sense, especially if you've got an easy Fed in the backdrop. Importantly, looking at the first quarter, though, not only did you get a dramatic run in the market, but the large cap indices really became very difficult to outperform. The benchmark as a whole was over 10% in the large cap market. An important data point, however, is that what this bar chart represents to the right panel is a divide in market performance in Q1. To the rightmost of the large cap panel, you'll see speculative growth was up sharply at about 14%. But notice the industrials and energy. We also had a deep cyclical move in the first quarter. In fact, if you look to the left panel in the small cap arena, certainly not as dramatic a small cap market in for the first quarter, but note the speculative growth numbers. In fact, it was paltry. And again, a more consistent sort of broadening that seems to be occurring among the industrials and deep cyclicals. This is something that we should be keeping an eye on, especially with a Fed willing to cut rates. And then finally, this issue on performance and active management. This two-panel chart really does a great job to reflect the challenges that's underway, especially in the large cap and large cap growth camp. Notice on the left panel, this is really the impact of valuations on share price performance. And what this is saying is that the blue curve represented by large caps, what it's showing is that if you've paid attention to valuations, you were severely penalized. That really in the last year or so, that's about a 20% underperformance if you paid attention to the most undervalued securities. Notice in the smaller cap arena, that is not the case, that valuations have added value. And so this is, I think, a major dichotomy that we're witnessing in the large cap camp versus the rest of the marketplace. In other words, fundamentals seem to matter outside of the Mag 7. The right panel is about leadership, and you clearly have more of this speculative trending effect in large cap camp. It is also recognized in the smaller cap arena, but nowhere as dramatic. This stacks up, though, for a very interesting second and third quarter on the run. With any questions, feel free to reach out to us. Thank you.